Welcome everyone to Crypto Art, Creativity, Value and Rights. My name is Giovanni Colavizza, and together with Andrea Leiter and Monica Kakovic, I'm extremely happy to be your chairs and to welcome you all today to this Global Digital Cultures webinar on the topic of crypto art. Okay, so before we move to the main the main event, and we have a really amazing lineup of speakers today and ample time for questions and panel discussion, I would like to briefly introduce the topic and add some provocations in there for discussion later on. Now, for those of you that are maybe not very familiar with the topic of crypto art, I actually went up yesterday on Wikipedia that I like to do and found this quite compelling, I think, definition of what is the key technology that is behind this new art market, which are non-fungible tokens. Now, in a nutshell, what is the idea of a non-fungible token? The idea is that we want to create a unique copy of a digital asset which is registered on a blockchain. Now, that is not an oxymoron. It takes maybe a little bit of time to sink in, but it's a very interesting and compelling idea, because what it allows us to do is to take a digital asset, think about a file, an image, video, and audio, and then register a copy of it on the blockchain and call it unique, right? So it becomes a unique asset that then we can do something with. For example, we can exchange, we can trade at the profit eventually. And this is the starting point, the technological innovation behind crypto art. So we use non-fungible tokens to tokenize digital art and then make it rare and exchange it on a blockchain. Now, that's the core idea. There are two other properties of non-fungible tokens, in particular how they are applied to art, that I think are interesting, and they are mentioned there. Point number one is that non-fungible tokens allow you to essentially create ownership of a digital asset, but without restricting access to it. Right? So in principle and in practice, people can still go online and see art, no matter who is the owner. We don't take it and put it in our living room. I mean, we could, but it's still online for everybody to see. Second point is that non-fungible tokens allow you to separate ownership with copyright. So you can own something, but you don't necessarily own the copyright to it. So for example, an artist could keep having the copyright on an artwork, but selling it to some collector. There is much more to it, but I'll leave it there. This is the technological starting point that enables crypto art as we know it. Now, you might have heard also that as of late, crypto art and non-fungible tokens more broadly, crypto art is a category really in the NFT economy, as being all over the news and all over the place, because it has surged, in particular in the early months of 2021, to broad media attention, in parallel with the surge of cryptocurrencies and the like, but that's a different story. There have been notable sales, right? So oftentimes something becomes popular because there are big events that, of course, happen after a certain history, but they are important in bringing notoriety to a certain ecosystem. And here, maybe the most notable example, it's Beeple's drop of Everydays at Christie's a few months back, which made really a splash because it was very, very high sale. Actually, I think it's the third highest sale ever for a living artist, right? Which is very, very compelling if you think about it. So very big on the news, high potential for market value. But also crypto art came with many other, let's say, positives, at least in terms of the story behind it. One selling point, if you like, or important potential aspect of crypto art is that it is more diverse, it is more inclusive, because it allows access to artists from all over the world bypassing what might be sometimes complicated entryways into the traditional art market. And indeed, there are success stories. For example, one is here, displayed here, Osinachi, who is a Nigerian artist that have become very popular in crypto art. And he's actually using just Microsoft Word for his artworks. And it is doubtful that he could have had a market and a visibility for his art before crypto art. Also, another aspect that I think is interesting, not unique to crypto art, but an essential component to it, is that it has witnessed artists making heavy use of a variety of technologies, right? Of course, generative art and other machine-aided forms of art are not really new to crypto art at all. I mean, there are trends that date back since decades. But this is an important subset, let's say, of artworks in crypto art as well. For example, AI-generated art is an important category there. Here you have an example from Robbie Barra, and his AI-generated nude portrait #1 is actually one of the most valuable crypto artworks on the market at the moment. So we have high market potential. We have at least in principle, sometimes in practice, potential for more diverse and inclusive community. We have high potential for technological innovation. We also have generational, innovation, if you like. I mean, you might have noticed the date of birth of these three artists that I've just mentioned: 1981, 91, 2000. So we're talking about millennials and Gen Z artists, right? So it's very new, it's very buzzy. Now, is it there to stay? That, I think, is a good question. I'm eager to hear more from our panelists today. But crypto art has ascended very rapidly. This is a chart of the market volumes for the main galleries over months for the past 2 years. And you can see that, first of all, there was a relatively long period of anonymity, let's put it this way, right? With very small volumes, and then an explosion in the past few months. But now the trend is also going downwards, again, as it is in general for cryptocurrencies, at least at the moment. So an interesting question, I think, is it there to stay, or is it just, a bang in the night? I don't know the answer, of course, eager to know more from our panelists. But something that I like to add as well to prompt discussion is that some of the promises of crypto art that I mentioned before, they are already questionable and questioned. One that I happen to do a little bit of work as well with someone that is in the audience actually, is that of the concentration of opportunity in crypto art. Here you can see a tool that is sometimes used by economists. It's called a Lawrence curve. It gives you a breakdown of how concentrated are certain assets in a given market. I'm using data from one of the main galleries in crypto art. It's called Super Rare. And what you can see here is how much of the market is or belongs to how many of the users of this gallery. You see in blue the sellers or the artists, and in red buyers or the collectors. And the way you can read this graph is the following. In a world where everybody sells or buys the same amount of stuff, we would have the green dotted line. So as we move up from the left to the right in your x-axis, we have sorted the users from the poorest to the richest, let's say. Everybody would be equal. So they would have the same share of the market up to 100%. What we see instead is very, very different, right? So we see that there is a high concentration of the market for artists and for collectors. And to make the long story short, this is what we see from this plot. We see that 10% of the artists essentially sell 80% of all the artworks in Super Rare. 4% of the collectors, they buy 80% of the artworks in super rare overall up until actually today. So that's not very diverse, and that's highly concentrated. So I think it's an interesting as well point for discussion later on, right? So is this openness and democratization of access to opportunity really happening? Now, for all these reasons and beyond, what we have done with Andrea and Monica and Chiara as well is to propose to Global Digital Cultures, which is a research priority area at the University of Amsterdam, where we all work, a project proposal to start making sense of crypto art and understand a little bit more about its community and its, let's say, economic underpinnings and cultural underpinnings. So this project has started just a couple of months back, and as part of that, we indeed also decided to organize this webinar to essentially have an exchange with colleagues that we think are very knowledgeable and will have definitely important points to make about all these questions. Now, what you might expect from us in the future is that, first of all, we would like to understand a little bit more about who is active in crypto art and why, what they are doing in it, what is their background, what is the culture, what they think about it. So to understand that, we have a forthcoming survey which we will circulate in maybe a couple of weeks if everything goes well. And so if you are in crypto art, please participate to that. You will hear more very soon. But we also plan to study more about, again, access to opportunity and success, as well as the relationship between the traditional art market and crypto art. So I'll stop there for our project. If you'd like to know more and get updates, this is our website, cryptoart.humanities.uva.nl. And I also encourage you to check out what the Global Digital Cultures priority area is doing at the University of Amsterdam. They have a wealth of projects and webinars, events, and the like. So you can look them up. That is the website or the Twitter handle. Now, enough about us, but I hope that this short introduction could serve as a, just basics and also prompts for discussion later on. But let's then move to the main part of today's webinar, who is really made up by three amazing speakers that I would like to really, really thank you for being with us today. I'll just mention your name and affiliation, and then you say basically whatever you like because the topic is so broad, and then there will be ample time for discussion later on. Speaking of which, just to inform the audience a bit more about how this will unfold, we will have a short presentation, 10-15 minutes from each speaker, one after the other, then a quick break, 5 minutes, and then we will move into a panel discussion with a Q&A. So you are extremely encouraged to ask your questions using the chat, using the Q&A functionality, and we will pick them up later on. Okay, without further ado, then in the order of their appearance, we will have Primavera de Filippi from the CNRS in Paris and Harvard, Ty Smith from the University of British Columbia, and Amy Whitaker from NYU. And again, thank you so much for being with us today. I think we can start with Primavera, if you please.
Thank you. Yeah, so maybe just a short introduction. So I'm a researcher at CNRS and at the Berkman Center at Harvard. And my research mostly focuses since 7 years now on the legal and governance challenges of blockchain technologies. So this presentation, and I also myself an artist, and I have a tendency of use art in order to illustrate my own research. And so since I started to do research on blockchain technology, I also started creating art with blockchain, not necessarily NFTs, but different types of blockchain-based art, which maybe we will discuss during the Q&A. So this presentation is actually specifically on the legal implication of NFTs. And the idea is really to explore with all those new opportunities that are provided for digital artists, which is quite revolutionary, the possibility for digital artists to actually create those unique copies of their work, which is something that has been tried to be done since the advent of internet and digital technology with digital right management system and so forth. But here there is really the possibility of creating unique copies without, as you said, without necessarily creating restrictions on the use and on the access to the work. So that's really incredible amount of opportunities. But there is also some technical and legal challenges that need to be accounted for. So I don't need to go into like the basic introduction because I think you've already done it, Joanne. But basically, yeah, non-fungible tokens are having quite some popularity in the past few months, with digital artwork selling for several millions of dollars. Obviously, following the increase of price of cryptocurrency in general until the recent drop. But so basically the question is, when we talk about digital scarcity, what are we actually talking about? And the idea is really that for the first time, digital artists have the possibility of creating unique or limited editions of their digital work, in the same way as a photographer can create limited edition of a particular photographic by restricting the number of prints. And that's great because that's technologically enforced. So you just codify the number of copies that will be created within the blockchain. And for sure, this is the only number of copies that can be created through this NFT contract. The problem, and it's a similar problem in the real world, is like there is little guarantees actually that the same artist will not actually create more limited editions, right? And so the fact that it is done on a blockchain and the fact that it is technologically enforced does not provide more guarantee if one does not actually trust the artist that the same exact work can actually be deployed on different platforms as this different form of NFTs. And the identifier, the hash of the work could either be the same if it's exactly the same work, or could be made different so that it's harder to detect that it's the same, that the NFT is associated to the same work. But basically, while the NFT is a unique copy of a particular digital work, there is nothing that prevents to create multiple unique copies of the same digital work. And so that creates some question around like, yes, there is a technological advantage of using blockchain technology in order to ensure this limited edition, but it's not a bulletproof guarantee of actual scarcity. There is also a question around digital preservation in the sense that, especially when one buys like such expensive digital artworks, the NFT itself, while the NFT is on the blockchain and therefore is very resilient and very unlikely to disappear unless the blockchain network is no longer being maintained. The digital artwork that is associated with the NFT is not itself stored on the blockchain, and therefore there also needs to be a concern about where and who is responsible for preserving the digital copy, so that it is possible to prove the association between the NFT and the actual digital representation of the work. And so many NFT platforms are providing, of course, a service of like centralized storage, but there is always the question of what if that platform all of a sudden goes offline or closed down. And then in that case, all the backups that are stored by this platform might no longer be available. Other platforms are relying, for the sake of decentralization are relying on decentralized storage solutions, such as, for instance, IPFS. But there is also the same question about like how can we ensure that the network, the decentralized network, is sufficiently incentivized in actually preserving those artwork, because it's also possible that there is not enough nodes that are actually storing these works if there is no specific incentivization, and therefore the work might get lost. And so there is also a need, like, for whoever purchased a particular NFT to somehow ensure at least maintain a local copy of this digital work in order to be able to always prove what is that NFT associated with. And then there is the question of what are the rights associated with those NFT. So just like when I buy a painting or when I buy a book, I'm not actually purchasing any of the rights associated with the work, with the actual artwork that is incorporated into this medium. In the same way, when I purchase an NFT, I'm not actually purchasing the copyright in the digital artwork, which is always owned by the original author. But I oftentimes, and depending on the platforms, those rights might vary, but I oftentimes acquire a particular subset of rights that are licensed to me, which enable me, for instance, to display the work on social media or on virtual galleries, or basically wherever I have online presences, I might have the right to at least create a reproduction and communication to the public of the copyright within the digital artwork associated with the NFT. Now let's go to the interesting questions, which is what type of potential fraudulent activities could actually be done, and to which extent can we rely on copyright law or IP law in order to address those, and to which extent we cannot. So this is an example, for instance, of an artist, in this case Beeple, that creates a particular digital work and then goes on a particular platform and is accepting the term of service, saying, I will never create an being tokenized on another platform, then create an NFT on that platform and then put it into an auction and receive some money out of it. Now, another user can find an existing work, take the same work that has already been tokenized on a different platform, or that has not yet been tokenized, create an NFT and get money from the sale of that NFT. And so the question here is like, well, obviously have breached the contract because it will be in breach with the terms and conditions of the NFT platform, which require that you will only upload works which you are the actual author or that you own the copyright of. And also potentially, or at least arguably, these NFT, if people are aware that this has not been done by the original owner of the copyright in the digital work, will actually have little value because those rights that will be licensed and that will enable the display of the artwork into my own online social media and so forth will not be legitimate because, of course, that third party could not license those rights on behalf of the copyright owner. But the question is, if anyhow this is done, then what type of recourse does the original artist has against this third party, and what are the various legal frameworks that could be leveraged in order to hold this recourse? And so the interesting question is that obviously one will immediately think about copyright, but actually copyright can not really help in that situation because what is actually being illegitimately reproduced by this third party is not actually the expression of the work, is not the digital work itself, but it's simply the hash of the digital work that is being incorporated into this blockchain-based token. And this is obviously not a violation of copyright, because there is none of the exclusive rights of copyright law with regard to the expression of the work which are being violated. And so copyright law might not actually be helpful in that regard. There might be the question about trademark, in the sense that perhaps one could claim that this is deceiving the public into thinking that this NFT originates from a particular person, and actually doesn't, because I'm not the artist that created it. But even this is complicated, because as long as I'm not claiming to be the original author, as long as I say this is the NFT of that art, of this artwork done by this artist, then there is no deception as regards the provenance or the source of the NFT. And so trademark might also be a difficult one. And basically the question is, like, when we think about counterfeiting, copyright and trademark have a specific vision of what authenticity means. In the terms of copyright, it means originality as regard to the expression of the work. It means that I need to have created something that violates what someone else has done, but this is specifically oriented towards the expression, in this case, the graphical representation of the artwork. And the fact of referencing a work through the hash does not actually qualify as copyright infringement. And trademark is about the provenance. And so as long as the provenance is properly mentioned, then trademark also will not help. And so increasingly we have NFT platforms that are actually making check and verifying that the artists that register are the actual artists, and require those in the term of services that they do actually guarantee they are only uploading works that they have created themselves. And also, like, now there is like a partnership that are being done with specific companies that are specifically oriented towards ensuring and verifying the provenance of work, to make sure that those NFT that are created are legitimate NFT. But this is done via the intermediary. So it is the platform that is doing this work. And then perhaps a very interesting one that I think is worth mentioning is what happened recently, again with Beeple, where basically a new type of counterfeiting has emerged. And so basically, just to explain a little bit technically how this came about, is that different NFT platforms implement specific smart contracts which manage and administer the NFT that they create. Some platforms have a proprietary contract, which means that everything needs to go via their platform, and the only way to create an NFT is to go via their own smart contract. And this is the case, for instance, of Super Rare. Other platforms actually rely on are more open, and they actually rely on ERC 721 compatible smart contract, which is the standard that has been established by Ethereum. And the interesting aspect of those is that it is possible to create an NFT on one particular platform, and that NFT, because it's compatible with the standard, will also be visualized on other platforms that recognize the same standard. And so what happened is that an individual, which called himself Monsieur Person, created a custom-made ERC 721 compatible smart contract, which implemented specific additional features. And this enabled him to create a particular NFT, which shared the same token ID as one particular NFT that had been created by Beeple on a different NFT platform, and also signaled that that NFT was minted into the address of Beeple. And so anyone then visualizing this NFT through those different platforms that recognize that standard would actually see this NFT, which basically looked exactly the same as if that was the NFT that was made on the original platform by the original author. But this smart contract had additional feature which actually enabled them to seize to seize the artwork in order to actually receive the funds instead of sending them to the address into which it had been minted. And so again, this raised the question of like, what kind of recourse is there? This person didn't actually hack anything, didn't really like corrupt any of those platforms, but just identified the possibility of extending this standard in order to add features that the platform will not display because they are not supposed to display those additional features. They don't know about them. And so again, the question is, can copyright law actually be helpful here? There are some discussions which are highly problematic, I think, about the idea, well, maybe copyright law should be extended in order to actually recognize hashes of digital work as a protected thing. Perhaps in the same way as we would say that architectural blueprints or like circuit diagrams are protected by copyright, and there is a violation of an architectural building by reproducing the blueprint. But this is a very maybe loose argument, because of course, while an architectural blueprint, it enables the creation of a building. It's like one can be derived from the other, whereas the hash, you can derive the hash from the artwork, but you cannot derive the artwork from the hash. And then similarly, like the idea that because the hash is a reference, then it's referencing directly that particular work, and it's kind of like the fingerprint, but then actually recognizing some kind of extended protection over the hash will also mean that anytime someone is to use the hash of an artwork for any possible reason, such as linking on IPFS and so forth, then that will actually qualify as copyright infringement. So that would be really problematic. And then same thing with trademark, like can we actually rely on trademark law in order to try and have some kind of legal recourse? By, for instance, saying that the token ID is like a particular serial number, which is an indication of the source, but of course the token ID is specific to a particular smart contract, and so that doesn't really make sense to consider that other smart contract cannot use a similar token ID for different purpose. And same thing like the minting address. So who allegedly is the person that has created the NFT and to whom the money will be given, which could be considered as an indication of origin. But in this case, again, because the work is actually done by a particular author, then mentioning that this is the work of that author will not qualify as copyright infringement. And so just to conclude, this means that in those cases, which are technically very feasible cases, it seems that either we need to rely on intermediary operators that are actually creating the necessary prevention mechanism in order to avoid those systems, or we need ex post to identify some kind of legal recourse, and we cannot rely on IP law. And so we need to look into other bodies of law, and of course there are a lot of but under civil law or common law, there is a lot of alternative means in which one could actually try to leverage the law to protect against this, such as like fraud and unjust enrichment and free riding or parasitism, etc. But so the interesting question is really like, while this is obviously a question of, at least intuitively, we perceive this as a question of counterfeiting, somehow the existing IP law on counterfeiting, but with regard to copyright or trademark, do not necessarily apply at the moment to NFT. That's it for me.
Fantastic. Thank you so much, Primavera. This is so compelling. I mean, so many questions that I would have. So I'll hold, but just remind everyone that if they would like to ask a question or clarification or anything, please use the chat or send each one of us a DM, and we'll pick it up later on. Thank you again, Primavera. Then I'll move immediately to Tai, our second speaker, please.
Thanks so much, Giovanni. And actually, thank you to Primavera for that excellent presentation. So fascinating and interesting. I also should thank Monica and Andrea and others from the Global Digital Cultures Forum at the University of Amsterdam. So thanks so much for having me. And also thanks to Amy. I'm really looking forward to your talk as well. I should say that I'm an art historian, primarily a media theorist, cultural theorist also. I've had a long interest in economic thought, which is how I've come into this question of crypto art, especially political economy, which would be bracketed by the sort of economic discourse of the 18th and 19th century, ending about 1870. So I'm a little old school here, but yes, I do think ahead a little bit too. But anyway, this is how I became interested in. So this is the methodological perspective I'm going to be speaking from, which is to say I'm not especially adept within the realm of the digital, although I can kind of maybe talk a good talk. So I'm going to share my screen and yeah. All right, now are you watching? Now are you seeing the presentation? Yeah, okay, exactly. Thank you. Sorry. Okay, so like I said, I'm going to be talking from the perspective of being an art historian and media theorist with some interest in economic thought. That said, I'm not going to be talking about questions of property or originality or authorship, the artist, which is typically an area that an art historian might speak from, or from the perspective of what is often called quality. That is the standard of something as measured against other things of a similar kind, or the degree or excellence of something. I don't really care about those questions. Or even in this case, the distinctive attribute or characteristic possessed by someone or something. So that's not really the kind of purpose here in thinking about value. Instead, I'm going to be putting forth something of a proposition or perhaps a kind of provocation for today. And it's simply this, that what crypto art makes visible about the realm of cryptocurrency, or perhaps we could say credit economies more broadly, credit economies being those economies that kind of came into existence with the sort of beginning of, say, the paper economy, money in paper form in the end of the 18th century. So what crypto art makes visible about cryptocurrency and or credit economies, so this broader temporal period, is that economic value always already approximates aesthetic value. Okay, so that's my provocation. Economic value approximates aesthetic value. So note the relationship between aesthetic value and economic value, of course, have long been a source of confusion, perhaps even a headache within art world discourse. And my colleagues here have also written about this quite a bit. But especially, of course, the case in the last few decades, since the rising cost or value, economic value of works of art at auction, at Christie's, at Sotheby's has skyrocketed since the, say, turn of the millennium. Normally, when this question of the sort of the confusion of economic and aesthetic value is framed, it's argued somewhat in reverse that works of art are commodities just like others in the marketplace. But I'm insisting on the reverse, that economic value approximates aesthetic value. That is, its epistemological origins and its formal identity are linked fundamentally to aesthetic value. So what do I mean? First of all, I need to define value. Essentially, both aesthetic and economic value, and I realize there's a whole huge discourse of value within moral value, moral theory. I'm not obviously thinking about that, though it is related here. But essentially, both aesthetic and economic value are built on the premise of deferred gratification. So the word deferred here is very important. So value, something's value itself does not appeal to our senses immediately or satisfy our palate or satisfy our hunger. That is its use. And sometimes people use the word use value, though it's something of a misnomer. Things rather have value because we imagine our relationship to them in the future. So value is by definition a deferral, and it's deferred in two ways. One, as a deferred pleasure. You purchase the work of art yourself to have it on your wall or on your computer screen and be able to gain some pleasure from it. You estimate a value on this based on this deferral, this deferred future. Two, as a bet on the future in which the reward, economic gain, or the approbation, for instance, or the admiration of your neighbors because you own this will be returned to you. So those are the two definitions of value. I mean, that's an essentially a kind of that feature is that imagination and that deferral. Why can't I go to the next one? Okay. So hence, Metakoven and Troubadour replied in their interview with ArtNet a day after purchasing the Beeple piece, the reason for their purchase of the work: this is going to be a $1 billion piece someday. This is going to be a $1 billion piece someday, as their primary argument, and hence the headline of the article. Of course, not everyone agrees with this valuation, or even the idea that the work has any quote unquote aesthetic value or artistic value, as expressed by Sebastian Smee, who's the main critic at the Washington Post, whose critique a few days later revealed something of what was exemplary of a lot of the art world discourse around this work, which is generally very skeptical about crypto art and its aesthetic value. And sure, people tend to think of these two things as opposed, economics and aesthetics. The former is quantitative and objective, the latter is qualitative and subjective. Economics has nothing to do with art and vice versa. But value, we tend to forget, is by definition exchangeable, which is not necessarily the same thing as fungible, as a medium of exchange, of course. And it has almost nothing to do with the present state of the object, and certainly nothing to do with its use. This is why, as Mark notes, in a capitalist society, this is from Capital Volume 1, the commodity can be compared to or valued against other things. 2 yards of linen equals a coat. Two things may be ontically distinct and be produced by radically different forms of labor, say weaving and sewing, but they can be exchanged for the other through the medium of money, quintessential value form, as it is called. In this instance of exchange, note, I'm here no longer using the commodity. Use, again, has nothing to do with it. The same goes for works of art or shares in cryptocurrency, but I can invest in both with the expectation of a future aesthetic or economic reward. So again, the emphasis in value is on the future enabled by exchange. Hence, this is going to be is the justification for the purpose. The decision to buy this work may be manifold, but the value of the work is that it will be recognized in the future to be a marker of the present, is how Metakoven frames it. History will show that this is a perfect indicator of this present. So it is a kind of bet on the future belief or expectation of a historical past. So in fact, these discourses overlapped, especially in the English context, of course, in the work of David Hume and Adam Smith. So I want to go back to the question of aesthetic value, which is importantly sort of central to the question. What is central to this is the question of the imagination. So as John Guillory reminds us in his book, Cultural Capital, the big insight of the 18th century is that things could have value, be they aesthetic or economic or moral. All of these values came about with the rise of civil society and the emergence of more general notions indicating good, better, and worse. And in other words, exchanging things that in a way that could compare them. In fact, so these discourses overlap, and Adam Smith and David Hume And here's a lengthy quote from John Guillory, which I'm not going to read all of, but I'll just read as portions of it. The problem of aesthetic value is not in fact a perennial problem, but can be posed as such only after the divergence of aesthetics and political economy, and as a consequence of the repression of their convergent origin. In other words, we have to forget the fact that they came about at the same time in order for those paths or disciplines to go on their own. So this concept of value is, and the kind of imbrication of the two is even more surprising, he says, for us to consider in the context of the present date about value, is that the problem of aesthetic judgment was as essential to the formation of political economy as the problem of political economy was to the formation of aesthetics. So the idea that something had value or future worth was new in that century. But of course, as we know now, these two discourses seem to part ways. Now, I just want to mention, of course, Adam Smith, whom Guillory is looking at, citing obviously more, but noteworthy, more known for his Wealth of Nations, the inquiry into this nature and status of the wealth of nations. His book, which was published in 1767, was also the author of a prior book, Theory of Moral Sentiments, and in fact was, as is often noted, a professor of moral philosophy. So these two treatises, the intention of their kind of pairing to one another was that they were to think about different ways or perspectives on how one values. So when Adam Smith wrote these two treatises, his intention was to trace how members of civil society are motivated by moral sentiments or imagined value on the one hand, and then in the other book, economic material interests of value on the other. And the great big insight of Theory of Moral Sentiments is that we imagine the approval or reproach of the other, and these are the sentiments or sympathies that we feel. Our moral and aesthetic values are motivated by our ability to imagine ourselves in the position of the other. So we sympathize with other humans or objects through this kind of mirror neuron, which obviously that's not how he would frame it, but that's essentially what it is, via the faculty of the imagination. So even Smith's later formed labor theory of value is a question of deferral of imagination. So I put up this quote about, which is sort of the most famous one, then cited frequently, about the labor theory of value, which is a question, again, of deferral and imagination, where he writes, the real price of everything, what everything really costs to the man who wants to acquire it, is the toil and trouble of acquiring it. What everything is really worth to it, or the man who has acquired it and who wants to dispose of it or exchange of it for something else, is the toil and trouble which it can save to himself and which it can impose upon other people. Thus, what I'm trying to say, most of all, is that if we understand how economic and aesthetic value are connected by historical origin, under the concept of value as a question of comparison and exchange, then we can begin to see and appreciate how aesthetic value operates, for good or for bad, within markets overall. Aesthetics, especially in the form of fashionable goods, but also art, or anything that confers an imagined approbation on the part of the wearer or buyer, has been the means, the vehicle, or the driver of capital from the outset. Without fashion, without aesthetics, I would contend, or I do contend, and Duchamp, I would say, in the early part of the 20th century, already realized this, capital would not exist. These are inextricably linked. So trends are not simply then a quantitative matter, a statistically identifiable trait that can be mapped on a graph. Insofar as trends imply fashions or fads, for instance, for the Ethereum cryptocurrency, which, as you can see, according to this graph, I've marked the 3/11 date, which is the date that Beeple's work was sold on Christie's, and you can see the kind of exponential rise and now decline of Ethereum on this graph. You can see, insofar as these trends imply fashions or fads, they bear all the collective desires and unconscious dimensions of our social sphere. They are a marker of the masses' imagined future. So, thank you very much.
Super. Thank you, Tai. Thank you for your presentation. And again, I'm refraining from asking you more, just waiting for later on. Another reminder that you can ask questions in the chat or via a DM, and that we will have ample time later on to discuss with our speaker. So hang in there. We'll get to your moment. And then without further ado, our third speaker for the day is Amy Whitaker, NYU. Amy, please, the floor is yours.
Thank you so much. Echoing Tai and Primavera, sincere thanks to our hosts and amazing co-speakers and also colleagues in the room, so to speak. Hello, Beatrice and everyone else. I'll go ahead and share screen and start there. So the main lens of my talk today is value, is really how do we think about all of these questions through a lens of value. And so I'll sort of circle back at a couple of points to some of the provocations that Tai and Primavera have made. And excuse me, I'm just looking at my clock so I can not fall into a blockchain rabbit hole here. I don't know if you got the memo, but it's now required to talk about the Beeple work in any conversation around NFTs. So lucky for me, I didn't forget these slides. Why do I want to talk about the Beeple work? Really for two reasons. As Giovanni said earlier, it is the third record price for a living artist. So that's behind David Hockney and Jeff Koons. And the price, people often say the price is 69 million or 70 million. And as you can see at the very bottom of this slide, it's $69.346250 million. And I like to see the 346 part because even the $6,000, which is easily rounded off, is quite close to a grant, a $7,000 grant that many artists in New York compete for in very strong competition every year. So the sum of money itself is quite remarkable. And the circumstances of the sale are quite remarkable, as mentioned, that, Metakoven bought the work to put into an NFT fund. And I don't think we've seen that before structurally, where part of the price paid at auction, which economists view as a kind of neutral price clearing mechanism, was actually also part of marketing for a future security sale. So this is quite interesting in and of itself. And credit where credit's due, I think no one summed up the general feeling in response to the sale better than Beeple himself. And I will let him speak for himself here. The second thing that I find really interesting about this sale is sort of what would fall under, and Andrea mentioned this in some of our planning conversations, this kind of labor theory of value. I genuinely find it interesting, independent of the aesthetics or the content of this work, which colleagues who have studied it far more closely than I have note is racist, sexist, and homophobic in different moments of this larger canvas. But it is quite interesting, and I have respect for the commitment to making a work of art every day since 2007, hence the title, Every Day is the First 5,000 Days. But if we honor this work for its labor contribution, I start to wonder about other projects that have a similar labor footprint and kind of why Beeple. Why not, for example, Nicole Wilson, who parenthetically has an amazing NFT project that is on view right now at Praise Shadows in Boston. I'm speaking on a panel with her June 3rd. But this is a really interesting artist to watch. The NFT project is based on the fact that she got all of the tattoos from Otzi, the Copper Age mummy, who has his own museum, and had them placed on her body and is now selling the tattoos as NFTs. I'll say more about that in a minute because it's related to some of the artworks I'll show later. Cole has a project where around the same time that Beeple started making work, she was really affected by the conversation in the US around the global financial crisis and the size of the US national debt. And so what she started doing is seeing spare change on the ground, picking it up and mailing it to the part of the US government that's in charge of overseeing the debt. So she has done this every single day since roughly 2008, 2009. And as you can see from this ledger, she has returned $519.48, and she has spent $18,932.98 to do it. So she mails the change by certified mail and copies it to the President of the United States of America. So I think this is a wonderful project, excuse me, and I kind of think this idea of labor as part of art is quite interesting. The background I'm sitting in front of, and I always go the wrong way, this is a work by the artist Nina Cachadorian that's part of the typewriter series of drawings. So she made this work on a 1957 Smith Corona typewriter. Parenthetically, she made it in response to me sending her page proofs from a forthcoming economics of visual art book to make sure I had written about her work faithfully. And it was adjacent to a section on Wedgwood as the person who came up with the fixed variable cost distinction that characterizes most of microeconomics. And so she made this drawing in response to page proof edits in an economics book. But I think this is quite interesting, not only as a study of labor, but almost willfully inefficient labor. You know, in a way, a kind of act of defiance toward this economic logic of value. You know, if we go from NFTs to kind of the more traditional contemporary coverage of auctions, we might think of something like the sale of this Francis Bacon work, The Portrait of Lucian Freud. This triptych, which was bought by Elaine Wynn at Christie's in 2013 for $142 million, a record sum, and not of a living artist, hence not in the Beeple comparison. I find this work pretty interesting because a couple of years ago, I sat in on a valuation workshop at the business school at NYU. Osak De Moteran is a legendary valuation teacher. I share his slides with permission, legendary for a reason. He engages in this very rigorous, vulnerable process of valuing companies. And you never know if you valued a company correctly because there's no counterfactual. And this is because for De Moteran, valuing and pricing are very different. So in his workshop, and I was sitting between someone who had traveled all the way from Saudi Arabia and someone who had left 6 children at home to be there. Page 273 of his lecture slides, he actually shows this work of art to make the point that you should never say that you're valuing something when you're really pricing it. And he would argue that in the case of art, we can only price it, we can never value it. Now, this is coming from a finance perspective, right? Because in finance, and like kind of a brilliant sort of like contrast, just to show like how unusual the artwork looks in the larger slides, you know, this is what it looks like to create a valuation model where you have cash flows of the firm, you have the growth rate and the reinvestment rate, and you're making guesses. So this really goes to Ty's point about value as existing in terms of how we conceptualize the future, except here the future tethered to this belief in efficient markets as captured by whatever discount rate someone uses in their valuation model. And De Moteran does have a sort of larger theory here, but again, intrinsic value in the finance sense is quite different from how we might describe intrinsic value in the artistic sense, right? Anytime accounting estimates go into intrinsic value, you're like, these are not art slides. But what I want to say is that for me, I think of value in a slightly different way. And this actually sort of speaks to some of what Ty just asked us to think about. And a little bit later, I'll get into relating to some of Primavera's really excellent comments. I wrote a book in 2016 called Art Thinking. And the premise of art thinking is that, borrowing from Martin Heidegger's essay on the origin of the work of art, if you're making a work of art in any field, you're not going from a known point A to a known point B, you are inventing point B. So this is a core structural problem in how we know value, right? So we already know that value is very hard to know for art at a point in time. And this is because we may agree with the provocation that economic value can represent aesthetic value. And I would describe that sort of bigger picture as the nothing but school of thought, that value can be made legible in a market sense, kind of the William Grant pricing the priceless kind of argument. There's a whole other school of thought, mainly in sociology, called hostile worlds, right? That artistic systems of value and economic systems of value can never mix because economics will taint the artistic, or if we fully commodify a work of art, Lewis Hyde would say that it's no longer a work of art because there's an idea of a gift that's part of a work of art by definition. So we have this whole problem of trying to even begin to understand social and cultural value at a point in time. But what I want to speak to is a different problem, which is how we know value over time, right? And so we are in a point A world if we are artists in any area of life trying to make something, but we won't know the value of it or if we succeed until we're in the point B world that our work helps to create. So this is a kind of interesting problem of value creation, quote unquote value capture, how we kind of align credit for things that people take risk to do. I would actually, and I've written about Adam Smith in this context because, as Ty mentions, he has this earlier work on the theory of moral sentiment. But he also, there's a wonderful essay by Walter Bagehot, the founding editor of The Economist, called Adam Smith as a Person. And he describes Adam Smith as among the most unbusinesslike of mankind. That he never intended to found the field of economics. He intended to answer a question about the progress of humankind and how it was possible. And he ended up making an argument for trade against a background of mercantilism at the time. So I think I want to use an example from blockchain world to make this point, what it looks like to talk about value when we're doing creative work that involves inventing point B. You may or may not recognize this page. These are the footnotes from Satoshi Nakamoto's Bitcoin white paper, which was circulated in the fall of 2008. The Bitcoin blockchain was started in January of 2009. These are all of the footnotes, 8 total. 3 of them are to work by Stuart Haber and Scott Stornetta. They have a third author, David Baer, who, fun fact, has a low Erdos number and a low Kevin Bacon number because he was part of the Beautiful Mind. Anyway, I digress. Haber and Stornetta worked together at Bellcore in the late 1980s, around the time that everyone was starting to get a personal computer, and they asked a very profound question. So inventing point B often starts with a question, and their question was, it's so easy to manipulate a file digitally. How will we know what was true about the past? And how will we know what was true about the past without having to trust a central administrator to keep the record? This is the question that got them to design a series of timestamping, which is what Nakamoto built the Bitcoin blockchain on. Parenthetically, this came about at a Friendly's restaurant in Morristown, New Jersey. And this is actually how I know Haber and Stornetta and their story, because the chair of finance at NYU, whose class I lecture in, was preparing for class and looked at the footnotes, pulled up the paper, noticed it was in Morristown, New Jersey, which is where he lives, and met Stornetta at this Friendly's, which is an American ice cream shop that they serve food, but people usually go there for ice cream. And this is where Stornetta had the breakthrough idea about having multiple copies of the ledger. So this to me is an example of the inventing point B problem of how we know value. I mean, the entirety of the blockchain owes a debt of gratitude to them. And actually, if it were not for a lapsed patent maintenance fee by a company, not them, because they didn't own their IP, the entire blockchain concept would have been under US patent the first year of the Satoshi paper. They were so far ahead of their time. They did spin it out. They ran a company called Surety for a while, and they actually, it's a long story. The mechanism by which they ensured that blockchain was not proof of work. That was Satoshi's addition, and really kind of radical reinvention. But they circulated sections, overlapping sections of the ledger to everyone who had records on it, so that it would be possible for people to piece together that nothing had been tampered with, and then to belt and suspenders that, if that Americanism translates, just to kind of double secure it, they published a code in the Sunday New York Times in the Lost and Found section This to me is the oldest blockchain in the world. They've been doing this since the mid 1990s. So I just want to say this idea permeates scientific and artistic creativity, this idea of inventing point B. And we see it in the art case, and this is where I want to start to kind of lead into a couple of NFT related provocations and then return to the larger conversation. So this is a picture of Jasper Johns and Robert Rauschenberg from the early 1950s. And the text is the art dealer Leo Castelli's journal from when he first started selling Jasper Johns' work. So these are works that sold for $300 in 1959 that sell for many, many tens of millions of dollars. Now, they were investors in their own work, right? And we have this problem in art where artists have to invest resources in the point A world. They sell something, the value becomes known later in the point B world, and they do not receive any of the proceeds. So the classic case is a Rauschenberg work that sold in the late 1950s for $900 and was resold at auction in 1973 for $85,000. Rauschenberg didn't get any of it. Some people try to address this through resale royalties, which exist in over 70 jurisdictions worldwide, including the European Union and the United Kingdom. So there would be a percentage of the secondary market sales price that goes back to the artist. In my opinion, the legislation is a bit chaotic. There's no cost basis, they're capped. With no cost basis, you get a cascade effect where people have to pay, all the intermediaries in a transaction all have to pay. So it functions a bit like a surcharge. But this to me is one of the really interesting features that we've started to see in the NFT economy with platforms like SuperRare that allow artists to claim resale royalties. And I know Giovanni has done some research on this. Massimo Franceschet and Sparrow Reed have done some research on this through the Data and Visible Economy Working Group. And so what I want to say is that these are ways fundamentally that we can try to include artists in art markets and create more sustainable economics for artists. And this to me is what's so interesting about NFTs and part of my own original introduction to blockchain, looking at property rights in art circa 2014. I do research with Roman Kreisel, who's a finance professor at the University of Luxembourg, where we used archival records from primary market sales to see what would have happened if artists like Jasper Johns and Robert Rauschenberg, but also groups of artists from mid-century New York galleries, Green Gallery and Betty Parsons Gallery, what would have happened if they had taken 10% less in the primary market in order to purchase equity in their work. And we found that they would have vastly outperformed US stock markets as represented by the S&P 500. In this picture, the S&P 500 is way down here. So I think that this conversation is really important because a lot can be gained. And what I want to say in terms of NFTs is maybe kind of three things, and then I'll conclude. I know I'm talking for a bit. One is that NFTs actually, to me, are very, very structurally similar to conceptual artworks, notably works by artists like Sol LeWitt. This is wall drawing number 51 from its installation at the Massachusetts Museum of Contemporary Art. It's all lines connecting all corners on a wall. If you can see, the exit sign is connected to the fire extinguisher, fire alarm, and so on. LeWitt famously said that the idea is the machine that makes the art, and his work sells with a certificate of authenticity. If I have that drawing on my wall, but I do not have the certificate, I do not own the work, in the same way that I have a high-res JPEG of the Beeple, but I do not own the work. This is a show from a couple of years ago at the Whitney Museum of American Art. You can see there's a LeWitt on the far wall, and then a work by Casey Reese on the left. So I want to say looking at NFTs as art, I think is still quite revolutionary to do and really interesting to do. John Watkinson and Matt Hall, who are probably best known for the CryptoPunks, also made autoglyphs. These are works that are structured like a LeWitt. They live actually on the blockchain because the file is small enough, because it's a set of instructions that executes the drawing every time. They were inspired by seeing that show at the Whitney. the work on the left wall, Casey Reese. Casey, who's a professor at UCLA, he and I are both advisors to a blockchain company called Bitmark and have been for a long time. Casey curated a show called Social Codes on a platform Casey founded called Feral File. They're registered on the Bitmark blockchain, which is a Bitcoin style blockchain, not Ethereum. And what's interesting here is that we see the two features that I think are most important in NFTs. One is equity and upside. So when this show opened, so many people tried to speculatively buy works that the infrastructure crashed and they had to relaunch it. 10 artists, editions of 75 plus an artist proof, priced at $75. Immediately, people started to relist them at much higher sums. But one, anytime something sells, the artist receives 10% of the new price. And two, the artist received a copy of everything in the show. So if one work really takes off, as in the Dmitry Cherniak, everyone has the possibility of selling it. That creates a secondary effect, not only retained equity, but collaboration and risk pooling, because they benefit. If one person succeeds, everyone succeeds a little bit. Kalani Nicole has done something similar with the show at Transfer Gallery, where an artist gets 70% of their sales and 30% is shared across everyone. You also see artists starting to develop systems of redistribution. Sarah Ludi, who's represented by Bitform's gallery, which is also Casey Reese's gallerist, whenever her work sells, 35% goes to the gallery, but that is split in shares. So 7% goes to the gallery owner and the others go to the individual art workers there. So with that, I just want to say, I think value is quite difficult to comprehend and to describe in art. And these systems of fractional equity, of resale royalties, and of risk pooling are really and interestingly enabling of how we make it possible to support creativity and art for more people more sustainably. Thank you.
Thank you so much, Amy. A brilliant presentation as always. I would like to ask everyone to join me in a round of applause, virtual round of applause to all our speakers today. I think we had really compelling presentations, and also in the interest of time, we were wondering whether we should just jump into the panel and discussion, eventually finish a little bit earlier. Would it be okay with you, Amy, Tai, and Primavera? Yeah, okay, great. So then I'll just leave the floor to Andrea and Monica for the panel discussion.
Okay, Monica, do you want to go first, or should I just go?
I think it's fine if you just go. And
okay, good. Okay.
Back on what you say.
Okay, cool. So, well, thank you very much to Amy, Tai, and Primavera. I think we had a lot of food for thought in these presentations from very different directions, really from the very legal perspective of what remedies do we have in law? How do we deal with this in law? What's the relationship between the encoding in the tokens and the legal techniques that we know and that we are interested in? And I think that also has a very big connection to the question of value, right? So how do we hold value then through these mechanisms? And I think then Tai really beautifully talked us through a historical grounding of the notion of value, of the coming up of the notion of value and its proximity, the proximity between aesthetic value and economic value. And I think Amy drove the point home for an outlining of how the notion of value is being used and understood in the crypto art world at the moment, what it means to make a difference between valuation and pricing. I think that's a very intriguing question. What does that mean to do that, and how do we do that? Do we have something to say with a labor theory of value? Does that make sense in this space, or does it not? So I think many questions are on the table, and I would be happy to open up the floor first, maybe to anyone from the audience who would like to ask something. Feel free to just unmute yourself and say so. If not, then we can just maybe give it 30 seconds for people to warm up and come up with questions. Or maybe in the meantime, analysts, and I think we heard so much of the notion of value already, but I think what I would be still curious to hear for anyone who would want to give that a go, what do you think, how can we understand, where does the value in terms of the economic value, this gigantic volume of money that we have seen pouring into this space, how do you make sense of that? What do you think is, how can we explain that? And it doesn't need to be like from just one angle. It could really be like, there are a lot of people in crypto who have money. It could be like people want to express whatever their sympathies and support for a digital art movement. I don't know. So what are your ideas of how do we come to having these large volumes in this? Is the scarcity a big deal? How can we make sense of this?
I wonder, Primavera, if you want to take the scarcity question, because that was so interesting in your talk.
Yeah, sure. I mean, yeah, I think the market value requires some kind of scarcity. To me, I think there is a problem when we associate like value with market values. And I think like that basically will mean that digital work had no value until NFT came about, because NFT enabled this scarcity creation. Maybe it is true that they had low market value, indeed, because one cannot exclude authors from accessing it. So the only way to assign a market value to a digital work pre-NFT was via copyright. And so you would have to license or sell the copyright in the work. And now you actually can sell the physical item. And I think it's actually very interesting. For me, there is like the revolutionary aspect of it is that it's creating scarcity, but it's also reducing scarcity by doing so, in the sense that if I take like the example, so I'm particularly really interested in like more like the Creative Commons style of things, and like how we actually can promote artistic creation that is reducing exclusivity and scarcity on the actual content, meaning that you can spread it around and reproduce it and remix it as you like. And I find that's very interesting that the NFT is kind of an opportunity for increasing the availability of content while nonetheless being able to reward creators through economic value by selling the copies, right? And so instead of today, like people that want to make any money out of digital art would need to restrict access to this digital art, to restrict the reproduction, the dissemination, etc. And with NFT, it becomes possible to actually provide a very, very open licensing model, and therefore reducing scarcity at the expression, at the content level, by creating scarcity at the instance, at the copy, and therefore making money out of the selling of copies as opposed to the selling or the restriction on the actual expression, right? And so it's interesting because then we speak about value, but what kind of value are we talking about? Like value of maximizing the dissemination of art and knowledge is enormous, and it's absolutely not related to scarcity. I will say that it increases with the dissemination, and yet in order to have market value, you need scarcity, and NFT is enabling to shift the scarcity away from the content back into the medium, if you like, if we can consider the NFT to be the medium by which the content is being communicated or transferred to the public.
Yeah, it's interesting. If I could just add briefly, I just responding to what you said, and I really agree and appreciate how you said that. I think that there's a way what you say almost sounds like a form of patronage, and I know patronage is extremely problematic, the sort of over-reliance on philanthropic donation as opposed to democracy to support the arts and the work Anna Geraharadis has been doing, among others. But I think in a way it's like saying because we have scarcity, one person can buy it, and the one person buying it allows everyone else to enjoy it. you know, so like the scarcity allows them to collect it as an asset, but that kind of counterintuitively creates this democratization of access to the work itself. I think that's one possible way to go. And then the thing I think about a lot, and I'm just curious how this sits in relation to what you said, is a much more profound shift from licensing to property. You know, that at some point kind of early in the kind of blockchain world, like the company Bitmark that I work with, Sean, the founder, the reason he started a blockchain company was because he had a son and he thought about giving his music collection to his son, and he realized he didn't own his collection. He only owned licenses to it because of this shift from, you know, CDs to the Spotify world. And I think that there's something very profound about NFTs that is a harbinger of all of us, for example, owning our data and transacting through shared ownership of data, as opposed to the kind of way that, like, you know, I am the product for Facebook or whatever else. So I think that there are a lot of things that are getting workshopped in how we talk about digital scarcity in the arts that may have much more profound impact. And I know Dada, I said hello to Beatrice earlier, but hello, Judy. I know they've been doing some work on this as well, but I think it's a case where, like, the arts might be the sort of sleepy side project that comes up with some solutions that help for everyone. And I don't know if Ty, if that connects to some of the ways you think about value in art as well.
Yeah, I mean, it strikes me that the question, again, the question of imagination is really important, or the symbolic value, so to speak, right? Sometimes it's also referred to as cultural capital, symbolic value, et cetera, et cetera. That, in fact, actually the rarity of the object is not as important as its ability to kind of be disseminated. And so works of art made by artists whose names are recognizable, for instance, are worth more because they've been disseminated. Likewise, the image that has this kind of viral presence in the world is then deemed to be valuable in the sense that it has like a kind of sense of, oh, this is a marker of kind of this historical moment, and this is somehow special. Likewise, the case of influencers, right? Like, they get their value from this sort of perception, the kind of perception of the work. So I think I can't kind of discount in all of this the degree to which, I think I agree with Primavera that what's interesting about the NFT is it kind of makes the rarity of the object actually not as important, and that allows it to kind of have this dissemination. But it only, again, it's because of the dissemination that it then has value, right? So the value is entirely kind of bound up in the reception side of the work. And actually, I wanted to ask you, Amy, if you could quickly go back to that slide that you had of the ledger, or I should say like the spreadsheet, or you could just describe like what were the components in it. It went by a little bit quickly, but, you know, is the artist kind of part of that valuation, or like the name recognizability, or any of those symbolic dimensions there, or even just the provenance of who owned it when? I'm just curious, because I feel like some of those sort of less kind of quantifiable, you could say, dimensions are often very much part of how valuation is made. And I don't know, like, to what degree those things are quantified.
Do you mean in the De Moteran slide of the valuation model? Yeah, I think what's interesting is like how much you really can't do that for a work of art. He's valuing shell. So he's saying, you know, or like if we talked about Nike, it's how many shoes do you sell? Are you reinvesting in designing new shoes so that you will sell more in the future? What's the profit? And how do I discount that back? So apply an opportunity cost of capital to it. With regard to art, I've seen people try to come up with equations, and all of them have like a hold all term. It's like an irrationality premium or some way of trying to explain the unexplainable. I'd be really happy to talk more about it. I mean, we can now, but maybe another time. I think most of the ways people try to come up with value in art market analysis is through regression of art prices, you know, starting with repeat sales methods to say it's sold for this and then it's sold for that. So this is a good investment. And Roman and Krausel and I tried to roll that back to the primary market, but you still are dealing with an asset that doesn't have cash flows, and that is a private value asset. So there are a lot of subsequent studies that are based on hedonic regression, where exactly as you say, they take, you know, the name of the artist and the size of the work and the material and whether it's signed and all these factors to try to approximate what determines the price. Roman and I are working on a couple of other things that hopefully we'll be able to complete this summer, but it's just incredibly hard to talk about valuation for works of art. Yeah, Primavera, I didn't know if you were about to say something earlier. I didn't mean to move past you.
No, I had two little answer. When we regard to patronage, because I think that the patronage entails really that someone is somehow donating or subsidizing someone, and then the rest of the world can benefit from that. I think it's different in the case of NFTs because it's not just patronage, it's actually the person purchasing the NFT is actually doing it for very also or mainly selfish economic and potentially speculative interest, right? So of course you can buy an NFT because you want to support the artist, but if you're buying an NFT, you're also doing it because you're collecting this NFT and you might sell it back on the secondary market later on. So it's interesting because it has more potential than patronage, in which patronage would be people that really just selflessly want to promote a particular artist, maybe because of their name, but they don't necessarily play the economic game. Whereas here you can have artists or you can have collectors that are subsidizing the artistic production and therefore the dissemination of those works for their own interest. And so you have an alignment of interest in which the artist wins because he gets money for his work. The public wins because there is more dissemination of work, but also the collector or the investor in the NFT also wins because it potentially resell at a higher price and also as an incentive therefore to promote the artist and so forth. So it's a little bit more strategic almost to rely on these NFT modalities as opposed to just a patronage, traditional patronage system. And the other thing I wanted to say was regard to property, because actually I think it's tricky, right? In the sense, yes, you own that digital copy, but you don't really own the artwork, right? You don't own the copyright, and I think that's the interesting aspect. So if I NFTs, I don't know, like musical art piece and so forth, I get whatever rights are associated with that NFT, with that music, which might be like playing it in some public settings, I don't know, but I don't actually own that piece, and that that's why the digital preservation comes about and so forth. But I have very little power over, because owning a digital work means very little except owning the rights in actually using, displaying, and potentially remixing that the content of that work. So I think when we talk about property, we are owning that thing, but that thing is actually very little but a certificate of authenticity, if anything, right? As opposed to actually being the work itself.
Yeah, but it's interesting because the idea that you don't own copyright is less remarkable to me, because that's true in the case of traditional non-digital artworks. No one ever owns copyright. But I think it's interesting hearing you talk. It makes me realize that for digital work, owning copyright is that much more important, because you are more likely to try to, especially as an artist, use the work and recombine it with other things, or the uses of copyright are more immediate. So I think it's a quite interesting point. And with regard to patronage, I agree with you. It's not like altruistic patronage, but I think, and I don't like to say something cynical, but I think it's quite similar to the sort of patronage where people are selfishly buying social capital by serving on major museum boards, or reifying the value of their own private art collections by donating works to museums. Or I mean, I think that there's some overlaps, which are also quite overlapping with critiques of philanthropy, in terms of it's like the motivation for the patron's behavior might be deeply as a side effect of creating access to works of art. I'm not suggesting that's a good system, but yeah, but so for me, what's maybe where my mind goes is whether you can use blockchain to create copyright clearance systems. So for example, in the Shepherd Ferry Hope poster case, if he had been able to get rights to use the underlying Associated Press photo of then Senator Barack Obama, he wouldn't have been sued by the Associated Press later in the Point B world when the poster had made $1 million. And so I think it's quite interesting to create forms of access to copyright usage to digital work. That feels really powerful to me, but I'm curious like why it feels like you don't own a real work if you don't own the copyright in a digital sense. Because I would say that that's exactly the same as how people own work, you know, in the traditional way.
I mean, I would say that actually owning a digital copy means owning the digital file, right? Like if I have a copy of a digital file on my hard drive, I actually own that file. I own this digital instance, right? Which might or might not be the original copy, but there is no concept of an original copy, and that's why you need to create an NFT, which is only and exclusively a digital certificate, but it's not the digital work itself. So owning an NFT doesn't entail ownership of the digital file that is associated with the NFT, and is also not related to owning the copyright in the expression of the work incorporated into the digital file and referenced through via the NFT.
Yeah, I agree.
Yeah, Giovanni, I think you're here. Let's go.
Sorry. No, just a quick thing. Since we're discussing about value, I wonder what do you think about the following? Because so we are discussing a lot about artworks, but there are also the artists that I think are quite important in this picture. And I think a way to see crypto art, I mean, not fully, but price prediction models, they encourage this interpretation, is that really the focus is on artists more than even artworks, right? It's kind of, so buying an artist is a kind of having a proof of stake on their future, current and in particular future creative output, right? And this is again very clear in the prices and very clear in this concentration on very few of them. Actually, this is one of the points that Meta Covan, so the buyer of that Beeple artwork at Christie's, explicitly made, right? So he said that I really want to put this kind of size of money, right, and very, very sizable amount of money in the hands of these artists and see what happens. And for me, that is part of the empowering them is part of the value of the investment. So what do you think about this view of crypto art, right? It's more about investing on the artist than specifically on an artwork.
Should we maybe just, I'm just seeing that I think Gustavo has his hand up. Hello, Gustavo, nice to see you. And I think that also we had a couple of other questions, Monica as well. So maybe we can pull a little bit and then have the answers to a couple of more questions at once. Is that okay? Okay, so then maybe Monica, you take over.
Well, I would like to sort of piggyback on what Giovanni kind of asked about the role of the artist. And particularly put it in a frame, namely looking at beginning artists. So we've been talking about how the crypto art domain democratizes and how everybody is inclusive and there's diversity and so forth. But at the same time, the market characteristics of this of crypto art is that there is incredible oversupply, there's uncertain demand. There's a lack of, let's say, objective measures for evaluation, for quality evaluations. There's no, actually, it's very easy to enter into the market. And that's very similar to what's going on also in the primary art market of, let's say, the traditional or the physical space where art is sold. Now, in the primary art market, so the traditional art market, one way to overcome this kind problem and sort of sift through these quality issues are like third-party evaluations, intermediaries. And now the nice thing about the crypto art domain is that there are no intermediaries, which give then the artists the power not only to recoup all of the sales profits, for instance, but also to, through the blockchain, put in some sort of royalty scheme. But at the same time, it's kind of a double-edged sword. What does it mean to beginning artists with this incredible amount of oversupply of individuals that are there? I mean, we tend to talk a lot about, let's say, you know, the outliers, Beeple, and other living artists that have sold for an exorbitant amount on the auction market. But what about the rest of the artists? How, and this is actually a question to all of the panelists from me, actually, is how would you recommend actually the artists, if you look at it from Giovanni's perspective, or if you look at it from the perspective of trying to understand quality or to have some sort of quality proxies, how would you recommend that a beginning artist actually starts off in the crypto art domain? How can they make themselves more well known compared to their competitors?
So maybe we add Gustavo's question and then we go into responses. Is that okay? Gustavo, please.
Yeah, thanks. Can you listen to me?
We hear you.
So thanks a lot for this event. I will be brief with my question. What happened with the dark side that we can have with NFT regarding to money laundering? Because if you remove the intermediary, like you were saying, at least we have some notion of, you know, what is an artist, what is some parameters of value. But once there is not this intermediary, what happened, or how does this change with money laundering when you can have any type of self-proclaimed artist at the same time someone changing and buying any type of assets, like for instance, I was thinking on the last moments, like for instance on the NBA, NFTs that were actually being sold. So when almost everything can become art and when almost everyone can become an artist, how does change the rules from money laundering, or it doesn't change? That's like probably an open question to the panelists. And thanks again, thanks Andrea.
Super. I mean, anyone, I think anyone with whatever you want to answer to, pick and choose.
I will kind of venture into the territory a little bit because we're talking about artists with Giovanni's and Monica's question. And then Gustavo's question is actually really interesting. Just to really quickly say that artworks are commonly real, like as in physical artworks are commonly things that are held in storage and are used as vehicles of money laundering. They've been investment vehicles for quite a while, and it is definitely a good kind of method. So I don't think that that's really changed in with cryptocurrency. I mean, with crypto art, although of course it's a little bit easier, and then it has the added benefit of being able to buy it with cryptocurrency. But going back to the question of artists and oversupply, one of the, and Monica's question about how can artists become better known? I mean, it's funny. I mean, I feel like that's a question that's often kind of like on a panel about, you know, young students who are at art school. How do I get my way into the art market? How do I become better known? And one of the things that I think often becomes apparent to students after some time is that it's about networking. It's about some kind of building a community or some kind of sense of their relationship to the whole and how they can kind of find their way in there. One of the striking things I think about the crypto art world, because it's so distributed, not that the you know other regular mainstream art world isn't also distributed, but it is kind of somewhat located by geography, and people actually get to know one another and they see one another in spaces and they become friends with people who then introduce them to gallerists, et cetera, and each art market, you know, whether it's New York or San Francisco or Vancouver or London, has like this sort of like micro economies. And what's interesting, I think, about this sort of space and why it becomes so much more difficult for these artists to sort of make names for themselves is because it is kind of like so completely deracinated. The only thing that kind of presents them in relationship to one another are through other social media platforms. So I think that like I mean, Beeple of course used social media, he used Instagram as his method. So long before he did the NFT, and that was really the kind of method of his sort of entry into kind of creating a name for himself. And I think that that's just like, it continues to be the method. So in other words, it's kind of branding, it's kind of marketing. And then just to go back to the question of the marketing, of the price of the Beeple, I mean, Metakoven, from what I understand, had already purchased a number of other works by Beeple, and therefore by paying the 69 million, betting against someone who was 70 million, who was already underwriting the work, you know, like that there was already a kind of insider job there. And it was in order to create an increase in value in response to Giovanni's work for future Beeple work or for the other Beeple work. So it's really a kind of like insider trading kind of deal. And I think we can't kind of not like stress that enough, because I think that it kind of goes to show that it's not a fair system, and that the work, for instance, that Nicole or Cole Wilson that Amy brought up, because it's not sort of operating within that same system, is just very much less likely, unless she were to, or they were to kind of like really work effectively at doing that. It's just not going to be valued in the same way. It's just not going to be, right? And so there's really kind of the determinants are so complex, and people know how to work the system, but it's about working the system, basically.
You know, it's interesting because my understanding is that Beeple was approached by the auction house because of his tremendous social media following. So he didn't come in through these traditional rarefied upper echelon gallery positions. And Cole Wilson, you know, she's connected to the art market in her way. She used to be the studio manager for Nina Cachadorian, who's represented by Catherine Clark and Pace Galleries. And, you know, I in a way, I asked the question of why that project isn't the Beeple NFT, very well knowing the answer on a number of levels. And also, I just want to say gender effects are highly studied in the art market and quantifiably proven in like 3 different really great papers that have come out in the last year. So I guess just sort of building on that, the idea that you're buying shares in an artist and not an artwork, I think is very true. I think artworks, they exist as kind of quasi-branded alternative currencies. You would say the same thing of a Damien Hirst or a Warhol. And I think this is really important to the value lens because in the case of Rauschenberg, for example, the Thaw painting that sold for $85,000 and he didn't get any of it. The reason that work sold for $85,000 is because of what Rauschenberg, the person, did between the time it sold in the late 50s. When it sold in the late 50s, his first show at Castelli, 1 work sold out of that show, and it only sold because Castelli bought it himself. And that work bed was later donated by Castelli in the 80s to the Museum of Modern Art because they had missed the boat on buying Rauschenberg's work when they could afford it. But Rauschenberg represented the United States at the Venice Biennale in 1964, won the Golden Lion, and that's really why that work became worth so much. So I do think it's appropriate to talk about artists and not artworks. That is a lovely dog, because those are the value creators that we're talking about. And then with regard to, I think it was Monica's question about democratizing access. I may have that wrong. I'm conflating my notes. It is really difficult. There are deeply inequitable starting points for artists. And I think you can get around that a little bit with these risk pooling approaches where if one person succeeds, it's spread across a lot of people. But I think it's really important just to name that. And this is, to me, is a problem of having to invest resources in a point A world. to make value in a point B world. It's exactly the same structure of argument for why I personally would critique proof of stake as a replacement for proof of work in verifying the blockchain, because it requires you to have money at the outset. And proof of work does too, because you have to invest in server farms to be competing. But basically, yes, these are problems. These are huge problems. And sometimes they're solved by government. Sometimes they're solved by patronage. Sometimes they're solved by cooperative structures, which to me is the most interesting approach. But I think you're absolutely right to name that. And then in terms of money laundering, there's some larger conversations. The responsible art market has hosted some really interesting conversations on the intersections of GDPR and anti-money laundering rules in the European Union, some of which are being adopted in the US as well. And I think for me, probably the NFT regime decreases the likelihood of money laundering. It increases the complexity of what tie names as insider trading. But the more transparency there is, the more registration of information, the harder it is for people to money launder, because you can see the points of sale and the prices. So, kind of fraudulent, intentionally wrong appraisal valuations would be a common way to try to money launder. And if you sell things, if each sale is recorded on a blockchain, it's actually, I think, harder to do. I also noticed the question in the chat from Hex C6. I just want to say you're named after the hex color codes. That is hilarious. And I'd like to know your real name, about kind of academic research and NFTs. And what I would say as an academic researcher and someone who speaks publicly a lot on NFTs, that's Massimo. Hello, Massimo. Well, this is a perfect kind of way to say this. So I speak a lot about NFTs, and I have spoken publicly about a lot of things that I have not yet published, in part because of the speed of peer review. So it's extremely common. And Massimo, I would say this in terms of your work, actually, and you may experience this as well. It's extremely common to do academic research that you try to publish by peer review and to have people post the same thing on Medium. And I think part of that is a good thing, because a lot of these companies like Super Rare are sharing data really openly, which is exciting. But the sort of pace of academic publishing is very slow relative to the development of these fields. And that's something I certainly have experienced a lot myself. And then when you speak publicly about ideas, you're essentially trusting everyone to recognize, and to try to cite your work. And that's true for other people too. I've seen, for example, Massimo or others speak about ideas before they're published on Medium or academically. But I think that the pacing of it and the opening up of data would be the two biggest things I would name there.
Yeah, if kind to add, I think I want to jump back on the question of like value, the value of an artwork making its economic value versus the economic value of an artwork making its value. And I think it's quite related with the question of like why are we still seeing like a few artists that make a lot of money and a lot of artists that make very little money as well on the NFT world. And I think there is like this thing of like, indeed, like it's the same as the artwork. You need to play the game, you need to network, and in this case network means social networks and so forth, and a lot of energy and a lot of time and cost are actually being put in like how do you boost your notoriety as an artist in order to boost then the economic value of your work. And I think there is also a very interesting thing that the NFT world is enabling, and which is perhaps problematic as well, which is in some way actually the economic value determines the value of the work as well, right? And because of the way in which the NFT auctions are structured, you can pretty much like boost your own economic value by auctioning between friends or auctioning yourself through different accounts and so forth. And all of a sudden, because your work has increased a lot in the auction value, then it's going to become visible, and then people will assume this is a valuable work because it has high economic value. Therefore, it becomes valuable, right? And so there is this very interesting dynamics in which you become popular as an artist because you manage to create economic value for your works, as opposed to the economic value of your works deriving from the popularity as an artist. And to this, I will also add, and I think this is one we're really also within this this mindset of like this exclusivity model of the art world, in which you need, the art world is only gonna welcome a few artists, because you need to have like well identifiable individuals and potential like speculative dynamics around those people. But I think there are actually, and when we look at the NFT platform, we can see indeed, like, in order to get into super rare or other platforms, you need to apply as an artist, they need to vouch for you, and then that becomes this kind of like exclusive gallery system. And the fact that I entered into this platform will enable me to get more economic value for my work, because I've been vouched for, because I'm being certified as like I must be a legitimate and sufficiently notable artist. But at the same time, there is also a lot of other platforms which I think are perhaps exploring alternative models, in which it's actually not about like getting to millions of dollars or even hundreds of thousands of dollars, but it's actually about creating circular economies and creating supporting networks of artists supporting each other. And I think that's true for like most of the artists today that have not managed yet to enter into the art world. And no one speaks about them, but there are like millions. And it's just people that are selling for a few bucks, or for a few $100 their work. And I think it's really great that all of a sudden those artists, as digital artists as well, can also be part of an economy, right? And it might not be like the art world economy, in which you need to be like the superstar in order to acquire any type of economic value, but you can have like increasingly large network of artists and non-artists that are supporting those artists, and that are really willing to pay a few $100 for one edition of maybe many editions of a digital work. So I think it's also like, while it is true that it is exacerbating and replicating the same model of the art world in terms of the superstar system and notoriety, and like really like a few winners and everyone has nothing, it also, I think, open up new venues for more participatory and collective mechanism of supporting. I don't even want to say small artists, because they're actually just as big as the others, but artists that are not investing in the same game of becoming millionaire artists because of recognition, but actually creating work that people enjoy and that people want to support, and they can support it also by purchasing an NFT on platform in which you don't need to be vouched for in order to get in. So I think like there is this there is always the social network game, of course, but there is one game that is, I want to boost myself up as this artist, therefore I'm gonna make sure that the value of my NFT increase. Or there is a game in which like I want to be part of a community of artists, and I appreciate what you do, I'm gonna buy your work, and you appreciate what I do, and you go buy more work. And this is what happened also in the physical world. It's just harder to make it happen in the digital world, and now it is possible as well.
If I may just say so, for anyone who doesn't know, Primavera has many different projects, but one of the projects that really hooked me very much before I knew her is her Plantoid, which I think is an experiment in trying to do exactly this, in trying to collectively care for artistic work and care for each other in a very different direction. So I think if for anyone it wasn't quite clear how that could look, I think go and look up Plantoid and the model that is written in there, because I think it's a very beautiful iteration of what collaborative art could mean. Okay, so I think that we have reached the exact perfect timing now. It's exactly 1 minute before we wanted to close. So I would suggest that maybe I'll just take the opportunity to ask the speakers first still if they want to add something, if there was something that they didn't, that they weren't able to park and that would be important for them to say. Maybe a last round. Does anyone? Ty, yeah, go.
Just really quickly, I was just thinking about splitting or sharing the kind of ratio of value, so to speak, of the work of art that Amy is trying to do with the blockchain kind of distribution to the gallerist and the workers. I would also suggest that clearly a big part of why works of art end up having value in the future is because they've been written on by critics and art historians. And one of the frustrations that I've had as an art historian is writing about, not frustration, I don't really care that much, but I've just noted that I'll write about a work, and then so a few many years later that I go back and look at that work at Sotheby's, and now it's worth quite a bit more than after, the example being Annie Albers, who's a weaver. Nobody cared about her work, and then people like myself were writing about her, and all of a sudden this work is now worth a lot more. And I wouldn't say that I'm the only reason, or that art historians or critics are the only reason, but they are a big portion of that. And so just a plug for the academic, you could say, within that terrain.
Yeah, I want to say, first of all, Beauregard, it sounds like your question has been answered by Giovanni and Massimo in the chat. It's not a question I'm able to answer while speaking. So thank you for that. And also, could I just say, like, when you ask questions like that, if you can say you are, like put your last name, etc., that's always helpful. I want to say that I completely agree with what Primavera said about the fact that there are intermediaries in the NFT landscape, very, very much so. There are also systems of taste formation that are different from the traditional kind of dealer critic gallery system, and that's also very interesting. But the curated platforms like Super Rare and the sort of thought leaders who kind of champion other people's projects, like the Jason Baileys of Art Gnome, and even Feral File is curated. So some of that comes about through artist communities. But that to me kind of sits next to the number I think about a lot, which is 91%. And 91% is the number that Christie's said was the percentage of bidders in the Beeple Everyday's sale that were new to the auction house. So I spend a lot of time thinking about disruptive technologies to the tastemaking structures of the art market, things I've written about that are under peer review. So like maybe one day they'll be published in 4 or 5 years. But I think those are also very large questions connected to the way that artists succeed and taste is formed, that are like very active in these conversations.
Primavera, any final words from Dodge for the Moon?
Yeah, I think that I mean, I guess it's also in line with what Amy just said, but I think there is this tendency in which, like, you have a new technology and it has like it is presented with a lot of disruptive potential, and it has a lot of disruptive potential, but then when you see how it is adopted, it ends up being adopted actually by people from the system that was meant to be disrupted by this technology, which actually, you know, and it has happened with like blockchain and banks, and now it's happening with like art gallery and auction houses and NFT and so forth. And they are just like, oh, this is great. We have a new technology that we can play our own game with and bring it to a next level. And I think, to me, I'm wondering, like, where is the innovation on the other sides? It seems like most of the NFT today is actually, at least the one that we're talking about, right? And maybe it's because this is the one that managed to reach those millions of dollars. But it's really about like replicating the same model. And I'm actually very eager and curious. And I think we have not yet fully explored all the potential that NFT provides in order to actually slightly diverge from the traditional model, or actually create completely different model that will enable artists to sustain themselves, promote collaboration as opposed to promoting scarcity and exclusivity. And I think like there is a very interesting aspect with the scarcity created with NFT, which is limited to the token. And I'm very curious, and I'm inviting everyone to brainstorm on this question, is like how this new technology actually can be used in order to flip the current model, whether it's copyright model, which literally is based on scarcity and exclusivity, and how we can use this technology in order to, quite to the contrary, encourage more dissemination, more reproduction of works, more remix, and so forth. And like, I think we now have this potential because you can keep track of who are the contributors, you can like split the fees automatically and so forth. And so you can actually create very interesting ecosystem of collaboration where everyone is actually part of the picture, as opposed to the current model in which everyone is building upon each other and it's only one out of millions that somehow will actually get a return on the work without necessarily redistributing to all the people that have participated to the making. So for me, like we still need platforms that are actually adopting a different model. Maybe it's a less rentable model, but definitely more disruptive and definitely more oriented towards maximizing artistic production and artistic collaboration.
Super. I think that is the perfect call for closing this seminar. There is the more, there is the future, there are the sticks to go toward and try to figure out. Yeah, so I think a big round of applause for our speakers. That was really a very, very stimulating and interesting conversation from so many angles. Thanks a lot for joining us. Thanks a lot for contributing your time. If we had an NFT, then the fractionals would be clear where they have to be allocated. If we at least would be in the old world, we could invite you for dinner and drinks. None of this, unfortunately, will happen today, but the mark is made in the book, and hopefully there will be the moment in which we can invite you for a nice meal and drinks to say thank you in more than just symbolically. All right, okay, so then thank you very much. That is it, closing for today, and see you soon. Thanks.
Thanks
Thank
a lot.
you. Bye-bye.
Bye.
Bye.
Thank you.